Hi, my name is Diana and I lead Payments and Airtime Engineering at Africa Stalking.
My name is Stephen and I'm part of the Developer Relations team at Africa Stalking. Payments in Africa is really fragmented because Africa is over 50 countries with their own regulations, their own methods of payment. So there's a lot of fragmentation.
Fragmentation, yes, just as you said, these are 54 different markets, but there's a lot of opportunity, I think, for all sorts of players to be innovative, from banks to mobile service companies to entrepreneurs or people who want to just build solutions around payments. It's a very exciting time, multiple channels, people are coming online. Offline payments is a very vibrant ecosystem as well.
There's different gaps because there are different levels to payment. There's countries paying each other, there are companies paying each other, there's peer-to-peer payments, and then there's this across different countries. So there are gaps everywhere because there are, as she said, opportunities everywhere. Currently, I would say that while a lot of current payments innovation is happening for businesses, there's still a lot of money moving informally that there's probably a lot of opportunity there.
As you said, services that target specific verticals, especially bringing the informal sector into the formal payment system, and not just for the sake of it, but thinking about how payment service providers, for example, can enable traders. And this, I think typically when people think about traders, you think about small time, but when you go to somewhere like Gikomba, which is a very big informal clothing market, there's a whole value chain there from wholesale, retail, suppliers, and these are huge amounts of money moving, but it's largely in cash and in the banks, just because nobody has figured out how to target those businesses effectively. When you look at cross-border trade, there's a lot informally happening. There's a lot happening with savings and credit organizations, chamas, informal groups that is not being captured in the formal payment system. So I'd say that's one gap. The second one I would say is a skills gap. Just because when you look at a lot of the solutions that have been deployed, so when you are thinking about something like M-Pesa, banking systems, many times these solutions are not built locally. So it'll usually be like some very big software service provider who's building the software somewhere else, and then that's white labeled and then deployed by the local telecoms companies. And I think that really, really hinders us because it makes it very difficult. For example, for your average software developer or somebody who's worked in the industry, connecting to something like a payment switch to enable payments regionally, and even connecting to banks, right? I mean, how many of us have bank accounts that we can interact with digitally other than through the mobile app? So there are all sorts of opportunities to make payment experiences really to add value there. And I would say that the two big drivers are we need a little bit of imagination. People who are technology experts, so quote unquote. So when you think about things like the blockchain or crypto, there's been a lot of hype, and Kenya recently formed a task force as well. But I'm not sure that we have a lot of that technical capacity. And notice, I did not say talent. Like, I think talent, there's a lot of talent locally, just there's a gap when it comes to, so if, for example, if somebody wanted to make mobile money software, where do you think they'd have to start? So that sort of thing is what I'm talking about. When you have APIs that allow anyone really to connect and start sending and receiving money, of course, providing that the requisite safeguards are put in place, you suddenly have developers building around that. And you can now start to have like a properly vibrant e-commerce kind of environment. People can consume digital services more because it's easier. Think about how long it takes to get government services, for example. You could just build like very quick solutions, USSD, SMS solutions, but you're connecting to somebody's finances. So I think APIs just allow access to systems, and even thinking about APIs as a business model or SaaS is a step forward in the right direction for just making the industry more open and transparent.
Easy to use money APIs will bring about an entirely new set of businesses, and and also that these easy to use APIs now mean that people can be more specialized. So right now the banks, for example, because they are controlling everything, they have to build their own apps, they have to build their own internet banking experience, they have to build all these other things.
Yeah.
But if there was one common standard of APIs, then someone else can make that his business model.
Something you said got me really interested. The first one was when you spoke about how open APIs will lead to this whole new wave of business models. So I thought about that, and particularly in line with how, now when you think about what's happening in banking now, especially in Kenya, where the banks released PesaLink as an attempt to stem the tide of M-Pesa, and there was a need for that because M-Pesa has limits capped on peer-to-peer payments, especially. You can only move so much a day, and that's just to make sure that money is moving through regulated channels. And also, Safaricom, M-Pesa is not really a deposit taker, so they're not regulated as a bank per se. But opening up something like PesaLink, their APIs, that means that people can very quickly build applications that leverage the banking network. But unfortunately, predictably, they closed up the APIs, and then those are not available. I think even M-Pesa, until recently, their APIs were not available. They didn't have documentation. So I think this idea of APIs is still very new to very traditional financial businesses, but it's catching on. In terms of mobile loans and lending, I think you're right. And the industry in Kenya, at least, is going to become regulated very soon, just because some of the practices are questionable, right? So there's the fact that there's a rate, there's the fact that these lenders don't really come under the purview of any regulator because, again, they're not deposit-taking institutions. I think that will change very soon. But being the first mover has its advantages because you can quickly adapt. That being said, I don't think those companies are going away anytime soon. There's clearly a big need, especially in a place like Kenya, where like the median salaries, or I don't remember if it's the average or the median, is 20,000 shillings per month. That's barely enough money to live on. So you find that people will turn to credit or alternative lenders to just plug the holes in their budget. And that's really is where much of the demand comes from, I think.
For blockchain and cryptocurrencies in general, I feel like it has its use, but I don't feel as though we have gotten there yet. I feel like there's still a lot of experimenting. I think in the general lifeline of money in general and of cryptocurrencies, we're still at the very beginning. So there'll be a lot of experimenting, a lot of highs and lows, a lot of big winners and big losers before we get to the point where we actually figure out that this is what it's good for. And aside from cryptocurrency, like blockchain as a technology is great in the sense that it's this immutable store of records. So I feel like that will be a very good, that will be put to very good use in other places aside from finances. It could be to track government spending, it could be to track identity, it could be like for a lot of applications. I feel like there will be a lot more ways to move money. There will be hopefully more open APIs. People's financial records will be better documented, and all these things will lead to a stage where people can access credit easier, people can pay for things easier, and I think it's good because that will force people to have better knowledge about their finances, better knowledge about what's happening to their money, where their money is going, and more businesses that we haven't even thought about the business model yet will come up because there will be a lot more ways to charge.
When we think of the future of payments, I think first, mobile money will just really spread across the continent. When you look at a market like Kenya where mobile money is sufficiently advanced, I expect to see other markets come on board the same way. The second thing I think we'll see is deeper integration across the continent of financial systems. This is like in 10 to 15 years. So I think the South Africans are putting together a bank, a central bank of sorts, so that they can clear money from each of those countries much faster. I'm a bit sketchy on the details, but that is happening, and it's happening at the government level. And I think the third thing that will happen is a lot of these established players who are relying on monopolies or platform monopolies to lock consumers in will have a very difficult time, because I think the tendency is just toward more open platforms and consumer choice, and I don't see that being different for African customers. And then finally, I hope that we find a viable alternative to cash that is not subject to a lot of surveillance, privacy violations, and just very predatory practices around digital platforms.